Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're discussing crypto taxes with the hope to eliminate some of the confusion surrounding it. Now, there's a lot going on. We've got crypto bills in Congress right now, so it's really important to note that what we're talking about today is about what's taxable and what's not taxable as the rules stand when this video goes live. Anything can
Yeah,
change.
yeah, you're right, Michelle, because the crypto regulations are definitely on the rise here. So stay tuned to the channel for more for clarification, as these rules are definitely going to change.
Oh, for sure.
So
100%.
yeah, it's just one of those things. So as of today, crypto investors in the United States are required to report crypto sales, payments, and income to the IRS and to your state tax department if your state requires it. So
Okay.
here's one big thing. IRS considers cryptocurrency as a digital asset. These assets are treated the same as like stocks, bonds, real estate, and other properties. You're taxed at different rates, either as capital gains or as income,
Regular income.
depending on how long you held that crypto. So,
All right. Before we dive into the details, if you like the content of this video, if you like crypto, hit that like button, help us grow this channel, and don't forget to subscribe. All right, Brian, let's start with the number one question. I know a lot of crypto investors have. How do I know if I owe taxes or not?
yeah, that's a common question. What do you do? How do you know? First, you must determine if you had a taxable or non-taxable event. And we're going to break down each one.
Okay.
And by taxable, it could be either capital gains or income.
Okay.
So let's break each one of them down. Let's start with non-taxable. Here's where you're have an event that you don't have to pay taxes on.
My favorite kind of event.
There you
Just
go.
kidding.
How about buying crypto and just holding it?
Right.
You haven't done nothing else with it. All you did was buy it. So what if you transferred crypto to yourself, like you
Yeah,
transfer
wallet.
it from wallet to wallet? I do that
Sure.
all the time.
Me
So
too.
um, giving crypto. Now,
How much? Up to how much?
um, this goes along with the gift exclusion for each year. Right now,
Oh,
that's $15,000 per person annually.
interesting.
Yeah,
Okay.
so that one is just now starting to come into play a lot. We're seeing a lot of charitable
Sure.
giving.
Gifting. Right.
So
Okay.
how about receiving crypto as a gift as long as you didn't sell it?
Yeah, that's the kicker right there. You can't sell it because
Yeah.
that leads us into taxable events, which is selling your crypto.
Okay, so let's break the taxable events down into two sections. One, capital gains. When are you going to pay capital gains? Okay. Selling crypto for more than what you paid for it.
Right.
Okay. And after the 12-month holding period. So if you held it for more than 12 months, it's considered a capital gain, a long term, right? What if you converted a cryptocurrency for another?
Taxable event.
Ethereum to Bitcoin, Bitcoin to Ethereum. It's now a taxable event.
Sure.
And what if you spend your crypto to buy something like a pizza? Remember that guy?
Yeah.
Or NFTs. That guy's going to be the most famous
Right.
pizza purchase ever. So, or NFTs. It's a taxable event because you had to sell to do that, right?
Okay.
Okay.
Got it.
Taxable events as ordinary income. Let's say you get paid in crypto. Think
Hmm.
about the New York mayor is doing this right now with his paychecks. Okay. And what about if you get paid in crypto for goods or services that you
Sure.
offer?
Right.
Okay. That's income. So how about crypto mining? That's ordinary
Taxable. Oh, so
income.
that adds as ordinary. Counts as
Ordinary
ordinary
income.
income.
Yep.
Okay. What about
Uh,
staking?
Staking crypto, same thing from the rewards that you receive.
Okay.
That's ordinary income.
Okay.
What about Ethereum? Like they're having this fork that's coming up.
The hard
Well,
fork. Yeah.
getting crypto from hard forks is taxed as ordinary income at the time of the fork.
Okay.
So
All right.
getting airdrops. Always wondered about this myself. because you get airdrops all the time. And it's like, okay, is this taxable? How is it taxable? It's taxed as ordinary income based on the value of it at the time of the drop.
At the time of the drop. I learned this when, was it 2021, filing 2020 tax? So it would have been last year. Yeah, filing 2020 taxes. I had a big airdrop, and I was like, what do you mean I have to pay taxes on that?
I didn't do nothing with it. I just
was insane because I sold mine. I made a good profit, but I was like, what do you mean? And then everything's taxed, right?
Yeah. How about any free crypto for incentives or rewards like referrals? Yeah. Same thing. Okay. Out of all of them, taxable events are the easiest ones to calculate, as they're just added to your ordinary income for the year. So
sure, just basic addition at that point.
Yes.
So let's talk about capital gains for a minute. How does someone figure out how much they have to pay in capital gains taxes?
Okay. Great question. Yeah. First of all, Michelle, you need to understand and start with how long have you held your crypto and what is your income level? You need to know them two things.
Okay.
So if you held it less than 1 year, you'll pay short-term capital gains on your profits as ordinary income.
Right.
Okay, so it just adds to your income for the year. Longer than 1 year, you either pay 0%, 15%, or 20%, depending on your income at the time and the tax filing status in that year. So,
okay.
Then you got to take, Michelle, you got to determine if you made a profit or a loss with your crypto. This is a big one. If you had a gain, your tax is based on if it was a short-term gain or long-term gain. If it's a loss, though, you're able to write off up to the annual limit of $3,000 on your taxes.
Got it. Okay.
Some people don't know that. So, but let's talk about cost basis, because this was confusing even to me, because in the insurance industry, I'll always talk about last in, first out, first in, first out. And that's the methods that IRS uses. Now in crypto, IRS uses first in, first out, FIFO method for calculating and determining your cost basis. But if you keep accurate records, you're able to use either of these two extra methods. Last in, first out, LIFO. This is when you sell the most recent purchases of your crypto first. May be a benefit in a rapidly rising market.
Yeah.
Or you could use the second one, highest in, first out. This is when you sell your crypto with the highest cost basis first. Thus, it's going to lower your tax basis for the year.
Yeah.
The key, though, is you must have detailed records to notify the IRS which crypto you are selling. There's the key.
Okay. All right. Real quick, you mentioned earlier about losses. You said you may be able to write off the annual limit of $3,000 on your taxes.
Yeah.
How does that, I mean, is it up to $3,000?
Yeah, it's up to $3,000 per year. And
so it doesn't matter if you lost 50,000. It's not a matter. It's not a percentage amount. That's the maximum you can take.
That's the maximum per year. But I'm glad you said that, because a lot of people are confused with that. They're thinking, oh my God, I lost 50,000, but I only write 3. No, it's 3,000 per year until you get back up to that 50,000 as you actually lost.
Aha.
So it's capital loss carryover each year, and you can continue it and continue it. Matter of fact, I had a client that before she came involved with us, somebody had swindled her out of $250,000. Oh, oof. She's writing off $3,000 a year for the rest of her life.
Okay.
But it'd be nice if she could get it all back at once.
Well, yeah,
it's not going to happen. So IRS says, yeah, we'll give you $3,000 a year. So,
okay. All right. Well, thank you so much for this quick overview. Like we said at the beginning, the information we gave to you today is information that we have the rules based on today's rules and regulations set forth by our good friends at the IRS. All right, Brian, anything else you want to add?
No, that's it for today.
All right. If you like the content of this video, hit that like button, help us grow this channel, and don't forget to subscribe so you don't miss any updates or changes from the IRS on the subject. When something changes, you can bet we're going to cover it. All right. Well, thank you, Brian, and thanks to everybody who watched.
Thanks, Michelle. Thanks, everyone. Have a great day.